Good afternoon and welcome to our webinar on trading Forex markets in a volatile environment. This is the latest in a series of live webcasts offered by TraderPlanet.com through collaboration with our community contributors and other well-known industry experts. Today is Thursday, January 7th. Thank you for joining us today. I am Darrell and I will serve as your host for today's session with Darrell Jobman, a senior analyst for TraderPlanet.com. Today's webcast takes place at a specific date and time, and therefore any opinions given by our presenter may change without notice at any time. Trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and will be archived on TraderPlanet.com, so you will be able to review the material at a later time. You can also find additional previously recorded webinars among our other free educational resources within our site at www.TraderPlanet.com. Today's presenter, Darrell Jobman, trades his own personal account and has been involved in the financial markets for more than 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor and editor of several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and or edited more than a dozen books and trading courses on trading. His mission is helping others succeed by learning the do's and don'ts of trading. Through his editorial contributions to TraderPlanet.com, he has really been able to satisfy this passion. We're so happy to have him visit with us today. Please join me in giving a warm welcome to Darrell Jobman.
Thank you very much, Darla, for that nice introduction. It's where I'm at. I have a note here from Ranjit in the Scottish Highlands, and he says, very snowy there. Well, he hasn't got all the snow because where I'm located, it is 20 degrees, it is snowing, but I'm hoping that your situation is better than mine. So, first of all, I wanted to start with a little housekeeping here. You will notice in the lower left-hand corner of your screen that there's a little man. He has his hand raised, a little menu beside it, little menu arrow there. And what I want you to do is to go there, and if you can hear me fine with the audio and everything's working good, go down to that menu and click on I agree. Now, if you're having trouble with it, you may not be able to hear my message, but if it's staticky or anything like that, click on I disagree. Okay, I see. It looks like we're coming through and even reaching the snowy Scottish Highlands, so that's good news. Okay. Keep that little man in mind. Next question, we're going to clear this one out, and I just want to find out a little bit about the audience and find out a little bit more about what you trade. And the first question, because of the nature of the webinar that we're talking about today, is currencies. I would like to know, I trade currencies. And if that's you, click on I agree. I know if I have some actual currency traders here with some experience. Okay? Have some? Have some? Okay, good. Now, maybe the rest of you then would be in that category where you'll answer the next question. We're going to clear those answers out. And the next question to answer is, I do not trade currencies, but I would like to trade currencies. Now, if that describes you, click on I agree. I'm assuming that that some of you that are here for perhaps the first webinar or interested in currencies, just kind of getting your feet wet. If that describes you, we hope to be able to pass on some good information to you during this webinar. Now, we're going to come back to this little man a little later, so I don't want you to forget completely about him. But we're going to move ahead. First of all, I want to point out that the data that I'm going to be showing you that we use on our charts is provided by CRB. They've been around for a long time, more than 75 years. And couple of other items. A couple of you maybe already have found it, but there's a chat box for questions and answers. So if you have any questions, you can enter your questions there. I'll try to get to those at the end of the presentation, probably not during the presentation because sometimes I'm on a screen where I can't see the questions. And then secondly, when we do get to the charts, it would be very helpful, I think, to you if you would get your screen in full screen mode, simply because you can see the detail a little better. We need to do a little background to bring us up to speed as to where we're at right now. Whether you trade currencies or not, you should be monitoring the Forex market. I'm not sure that's not a surprise to you, because of all the markets that are traded, none probably has more effect on the average person on the street or the businesses or industry as the Forex market. And the kingpin of the Forex market has been and continues to be the U.S. dollar. Now, as this chart shows you here, where we have the U.S. dollar depicted for the last 2 years, you can see that there has been quite a range of price factors here as we've gone through time, and you can see here we have some situations with the market moving very rapidly up and very rapidly down. We have situations right here where we have the market moving up, kind of in a long trend, and as you know, currencies can be good trending markets, and then we have had what we would describe during almost all of 2009, kind of a bearish situation. Everybody gave up on the dollar. Everybody says the dollar is going to be weak. We have all these factors going on, the fiscal and monetary factors that are going on in the United States, and therefore it looks like for sure the dollar is going to get weaker and weaker and weaker. We're going to go past these lows that we had down here, and you know, it's kind of like the gloom and doom crowd for the dollar, you might say. Just as there are the gold bulls, you have the dollar bears. But what happened is that in recent times, last month or so, the dollar has rallied. That's counter to what some people might expect, but goes in line with what some other people said. So now, are we in an inflationary scenario or a deflationary scenario? That's kind of the question that everybody has been talking about. Which type of a market are we in? As we look at the dollar, we now go to the euro, which is kind of the mirror image of the dollar. It's the other side of the picture, a contract that many people trade. This is the euro-US dollar pair. And as you can see, where we had the lows, now here in the euro we have the highs around 160, and we have the lows around 125. So we have a lot of range within which to work. Then you see this little downturn here at the end, which coincides with the dollar uptrend. So now the question is, where are we headed with the euro, which is probably traded by more people than the US dollar index itself. A little background onto what influences the various currencies. I don't want to go through these in any detail, but here we have a lot of factors that we're well aware of one way or another. We know that money tends to flow to the place where it can earn the most money from higher interest rates. We know that countries and central banks like to keep the value of their currencies low enough to encourage exports. We have all heard that the creation of these trillions of dollars